Second issue, occupancy. Let's say that you are concerned that, hey, what if that person moves out? What if that person stops paying rent? All right, first issue, moving out. If someone were to move out of your property, typically they're gonna make more when you rent it back out, okay? Let's just say that in a 2-unit, somebody's paying $1,800 right now. Well, market rent for a 2-unit on Section 8 is actually about $2,200 right now. If that person moves out, you're actually gonna make more money if they move out. So you do need to have some reserves in the bank because you do have to cover the mortgage while you're not getting that additional $2,100. But once you rent it back out, you're gonna make more than what you initially had. So don't fear somebody vacating. It may end up in your favor. Living next to someone, okay? I've had this been brought up by several customers, so we have to address it. And the first question is, where do you live now? Because if you live in an apartment complex and you have neighbors already, then let's not act like you're uncomfortable with neighbors, okay? You may be uncomfortable paying to have your own property that also has a neighbor, but you get in where you fit in, people. If you can't afford to own a single family residence right now, we're just gonna get you in a 2-unit. And guess what? It's gonna help you still get to a single family residence, okay? Benefits, number 1, future income. So if you are currently paying $2,100 and then you're also getting $2,100 off the market rents, ideally, if you were to move from that property, you'd be able to rent it out for that or more. The rule for occupancy is at least 1 year. So if you occupy the property for 1 year, you can move from it and rent it out. At that point, it depends on where market rents go as well. You might be able to rent it out for $2,200, $2,300 upon you vacating that property. So you might only make a few $100s during that time, but keep in mind, you bought this property using an FHA loan. FHA has mandatory mortgage insurance. That's going to account for about $300 to $400 towards your monthly payment. So around the first year before you leave, you might want to refinance that property. Look at if you can remove the mortgage insurance.